Well, good morning, everyone. Good afternoon, good evening. Welcome to Traders Around the World. I hope folks are doing very well. We've had a risk-on reversal in the market. Is that risk-on reversal going to remain in play? And is this market going to go up, up, and away? I hope everyone is doing well. We've had the Trump U.S.-Iran reversal yesterday. That reversal is following through today. But have we actually gotten above water lines that support us sustaining and continuing to rise? I hope folks are doing well. Hey there to everyone that's writing in. Very good morning, good afternoon, good evening. Some folks watching from the middle of the night for them. Some folks watching from the very early hours. And everything in between. All right, folks, I hope you're doing well. Give me lucky number 7 in the chat. Let me know that the AV is all good on your end. We're just going to make sure that we start off with our risk disclaimers here. Everything that I do and say here is for education and insight purposes only. It's not meant as advice. I'm not a registered financial advisor or representative. You must consult yours before making any trading decisions. Trading involves risk, not just reward. Risk of loss. Trade with money you can wholly afford to lose. When I trade, it's always in line with my risk trading plan, which is unique to me and might not be suitable to you. Consult your registered financial advisor or representative and get a risk trading plan and trade with money you can wholly afford to lose. When I discuss past trades taken, do live trades in front of you, come up with plans and projections for future potential trades, whether I'm doing so with respect to a live cash account, a demo account, or a prop trading account, it's all done for education and insight purposes only. It's not meant as advice. Finally, if I poll you in the chat and I give you an average response back to that poll, the sentiment there is not necessarily indicative of the sentiment of the entire group, just those responding. I don't audit the chat, so do take that stuff as anecdotal. Okay, are we all ready to go? So I'm extraordinarily sore this morning. Julian and I went to the gym yesterday, and he wouldn't let up on me at all. I think we were there for 2 hours. And we did the entire upper body of all these machines out there. And I woke up this morning, creaking and cracking. And he writes back to me in the morning, and he's at camp right now going, I'm fine, not even sore. Amazing. It's amazing to be young, right? All right, so let's get right into it, folks. So I want to start off with just giving you an orientation of where the market is right now. Let's do that with the more plainclothes chart here. So what I'm going to do is start off with the S&P E-minis, and we can look at a couple of things over here to just help us orientate. Hey, where are we going to be trading? Are we going to be trading long? Does the market have the chance to, continue rising after the incredible rise that we've already seen? Well, somewhat incredible. The reversal on the ES might not look as spectacular, but we were down in the 74.60s, and now we're almost 100 points higher than that, about 80 points higher than that at this stage. So we've got a reversal in yesterday's market, which is something that was driven by the press conference that Trump had. And following that, we ended up seeing the 10-year U.S. Treasury auction yesterday afternoon go very well. There was a lot of foreign demand. So it seems to be very clearly timed well for capital to flow into the U.S. These press meetings and of course how he plays the market. So he did a great job of that yesterday. The bond auction went well. A little stumbling during the release of the FOMC meeting minutes, but nothing too traumatic at all. And we got a reversal tail. We ended up closing right at the bottom lip of what I call the mattress, which is the center of the weekly pivot levels here. These are weekly pivot strategies, DeMark and Fibbo. Very top of the range, 77.12, very bottom, 73.20, center of the range. The top lip is the DeMark balance pivot, a weekly pivot line, and that's the Fibbo balance weekly pivot line. I like to call this the mattress. If you take money from under the mattress, which is what we did yesterday, and pull it up above the top of the mattress, you're putting it to work. It's risk on. It's likely going to grow. However, we are still dealing with that volume point of control area going back to the beginning of May and beginning of June, right? These are volume profile histograms nested from the beginning of May and beginning of June. And there's another one in here from the lows that we had on the 11th of June as well. They all coalesce in and around the 75.55 line. And we've been above it by a couple of points or so, but we have not been able to sustain above it. Now, the the movement of the S&P E-minis is effectively a byproduct of the direction of oil, which is then influencing the NASDAQ and then influencing the ES. So what we need to be very clear about is if the ES gets back up above 75.55, it is probably generated by oil down, NASDAQ up. If it starts to play more of a leadership role, we'll recognize that during the day. But what this does for me is it makes the NASDAQ the primary index to trade. The secondary index would be the S&P in today's market. So again, 75.55, the long side trade is alive above there. Can we get back above there directly when cash hours start in about 6 minutes from now or so? Well, if we maintain a hold of the top lip of the mattress, 75.35, the technical signals are positive enough to say we're going to try. The 5-minute chart, which looks out 20 to 90 minutes, is in a positive signal state right now. I'll just show you that right off the bat over here. So what I want you to see right here on the 5-minute chart is that we are in a buy signal state. The triple S line, the red line, has come from the bottom quadrant from the first quadrant into the second. It's crossed over the fast momentum line, which is that dashed black line, and it's crossed over the slow momentum line. And we find it trying to re-rise back up to the center of the channel. It had one big attempt, and you can see that attempt. That attempt started at around the 75.24-ish area, around 6:50 a.m. Eastern time. Actually, my apologies. Yeah, around the 75.25-ish area, around 6:50 a.m. Eastern time. We got that rise happening. We got the pre-trade conditioning pattern in, but we never ended up following through. It's pre-market action. Got some data out. Looks like that might have affected things modestly, but we're back to a buy signal and we're back above the channel right now. Now, a 5-minute chart tends to look out 20 to 90 minutes. 20 to 90 minutes. So the fact of the matter is we're in a signaled state to support a continuation up. But again, it's not the driver, right? We just want to understand where the primary market is, and then we want to really go back in and scrutinize the NASDAQ a whole bunch more, and of course, oil as well. So at this stage, I'm going to leave that insight on the table for you there, and say, hey, that's a positive. That leans us up. Let's now go and take a look at the NASDAQ. But before I click on the NASDAQ, I want to just, dot the I's, cross the T's on oil. So we looked at oil yesterday with a chart similar to this, where I'd superimposed the ES on a 5-minute time frame basis on screen. That's the blue bars, and oil. The August contract is the red and the green bars over here. So we know yesterday morning at 4:15 a.m. Eastern time, yesterday morning, July the 8th, we had that big drop in the market, big pop in oil, drop in the market. And it's interesting to note that oil made a high, then it made a higher high. The primary market, the S&Ps, didn't make lower lows. But we can see the clear inverse correlation here. Now, oil coming down below the top of its weekly pivot range, positive. Oil coming down below the local low right in around the 72.50 area, very positive. Oil coming down below 71.96. Now, that's going to rocket ship the market up if that so should happen. And it's going in the right direction. Oil is seeing falling tops. A little lower low happened over here. We just need to see this now become a lower low in order to support those blue bars shooting up and getting us above that 75.55 marker and staying and sustaining above. So while oil is in motion to come down, it supports the idea of up and away in the market. So you've got two factors, right? You've got the 5-minute chart on the ES supporting an up signal. You've got oil coming down below the top of its weekly pivot range, heading in the right direction lower to support long side trades. Let's go now and take a look at the NASDAQ on a day over day basis, and then we'll flip into the technical view of it. So there's the NQ. So the coil got busted a couple of days ago. We did trade lower like we were expecting, from the insights a couple of days ago, but we had that risk on reversal, and that risk on reversal got us to close somewhere in and around the 29,400 area. We didn't close at the highs, but what you can see very clearly is as soon as we started the next future session, we pushed right up. We got back into the coil and we got above a one key level over here. You can see this little gray bar sticking out right over there. That's a volume profile node. It resides at 29,670 points. while the NASDAQ remains above that line, there's a better than fair chance that we're going to come up and try to engage with these red lines here. What are those red lines? That's effectively the water line. That's the most important water line. Like the S&P's got that water line at 75.55. That's the water line that we need to get our head and shoulders above in order to support a rise that can take us back up to the top of the coil or higher. So are we in the running for that to happen? Well, oil's coming down. We don't have a signaling problem on the 5-minute chart on the ES. It supports up. Now we need to go and take a look at the signaling on the NASDAQ and see if we've got that set up straight as well. So what I'm going to do over here is just take you on the journey from the daily chart down into the 1 minute. The daily chart's still in a sell signal state. And at this stage, if you take a sober look at where we're located, we're in the channel, right? So swing trades here don't really make sense unless we get above the top of the channel, which is at the 29,920 area, 905 area. So right above there. Now, are we headed up to it? We know that the 820 area is the number that we need to surmount. We're at 740 right now. So let's go and take a quick look at the 4-hour chart and see if there's resistive structures around that 820-ish area. Well, the top of the 4-hour chart's MSR channel is sitting at around 800. You can see that just below the 800 marker. That's going to be the challenge line that we need to get above. But can we actually make the move up to it? Can we move 70 points? Well, the NASDAQ can move 70 points in a millisecond, apparently, in this type of market. What I want to do is just confirm for you that we are in the upper half of the 4-hour chart channel. We are trying to get above the top of that channel. It's the 3-lined MSR channel, and it's sitting at around the water line. 29,800 is where it is. It will open the door for us to shoot up towards 30,000 above roughly the 29,800 marker. Is the 1-hour chart, which looks out 3 to 6 hours, in a buy signal state, supportive of a continued rise? The answer there is a clear yes. So we've got the champion trend indicator, the champion cross zone, the dots are in play. We also got wealth signal, the fast speed lines above the slow, and triple S is in a buy signal state as well. Is the slow momentum line sloping up on the NQ here? So you can see that right over there. That is a positive. Okay, so that is a positive backdrop. So even if we fall back, we're going to be caught in rising support that can support a long side move. Now, the market's just started, 30 seconds in. We're not getting a direct push up. This is the 5-minute chart. We're seeing a little bit of softening, probably a little bit of profit taking from the rise that we've seen in the pre-market. I'm going to take you down to that 1-minute chart in just a second here, but we want to understand where that support line is that we're coming down to. It's the 670 marker. We need to sustain above the 670 marker in order to support an attempt directly back up. And on the ES, we need to sustain around the 75.40 to 75.35-ish area. We're at 75.35 on the ES at this moment in time. It looks like profit taking more so than real fundamental selling at this moment. But I do want to scrutinize this with you on both ends. And I'm not going to trade this type of volatility right out of the gates. It's too whippy. I am looking for a resolution to the upside. You're looking at a 1-minute chart now, so it'll really clarify things. I'm going to start looking long, potentially above 740, 750, and try to take that trade up to the 800, 820-ish marker. But I obviously cannot take that trade right now. We are in a 1-minute chart sell signal state. We're below this channel. We're below the speed lines. We're not making a lower low versus the first 1-minute bar, which is decent enough news to begin with. But I really do need to see some more traction over here to the upside, and it should whip up and rip right back up. I don't want to buy it into falling resistance. I'd like to buy it if I've got some proof that it's evacuating the sell signal state, and we don't know that yet. We'll have some proof above 736. Right now, it's just dropping, and dropping, but I don't think this drop is fundamental selling yet. Let's go back to that hourly chart for a second over here and just reinforce the idea that as we're coming down into a key level, it's the 670 line that matters at this moment. It's supported by the slow speed line on the hourly chart. We're not below it at this moment. We're coming down to engage with it. We have. Let's see if we can hold that line. And the similar line that we need to hold above is, of course, 75.35 on the ES. So let's go take a look at this. And Harsh, I agree with you. If we can get this dump that then pumps, where to take it on is the question, right? Because right now, as it's trying to potentially pump back up, it can still be whack-a-mole down. I think the quote unquote safer place will be at least in the upper half of the 1 minute charts MSR channel. And I'm probably going to try it there. I would want to try it even more so above 760 to play it up to 820. But right here, risks are still too high. Let's wait for that pump to actually get us above the hump in order to look for the a more stable long. So I'm waiting right now. Fingers on the trigger. Buttons depressed. I'm not unclenching it obviously yet. I'm waiting. See if we can pop up. And it's still a high risk decision to take it while we're in the channel, but we've got this momentum in play right now. I'm going to try it out right here. So I should be in one contract right now of MNQ. And look, this can get whack-a-mole down at any given moment. So be very careful. But looks like the first trade is profit positive. 10 seconds into the trade so far. That seems to be going fairly well. And there we go. There we go. And are we going to get continuation? I don't know, but I'm taking profit on my first trade, locking that in, and then I'm going to play a continuation trade above the 760 marker. Now, could we just accelerate and just blast off from here? Or is it going to be something that has to pull back? So the second trade that I've taken has risk of coming back to back test the top of the channel and then coming back up. That risk is real because we are of course a little extended, but this is a slingshot type move. So I've decided to take on the next tranche. It looks like it's profit positive, past the 20-second marker over here. And I'm going to take some profit on that trade. Now, for those who are playing continuation at this moment in time, I'm seeing a wealth signal, that orange ball, appear under price, which is good, which supports that more of the trend is in front of us rather than behind us. So as we approach the 800 to 820 marker, I want to be careful. I'd like to take the trade on above, let's say specifically, above the very top of the resistive structures here. So they're all volume point of controls going back to the beginning of May, beginning of June, middle of June. And the ultimate number is 29,840. So from where we are right now, we are rising into a concrete ceiling. So I'm not rushing right now to jump back into the trade. And you saw the second trade that I took, I decided to get out of it because we are moving into known concrete ceiling. It's a known overhead resistance structure. So no one should be surprised. You've heard me say 29,820 about 29,820 times in the last several weeks. So obviously it is a important structure of resistance. I'm going to probably wait for us to get above the 840 marker as my next trade. The alternative to that would be potentially seeing a pullback and then push back up. But 840 is the number. Those who want to take the trade from where it is up to 840 and through 840, all the power to you. I just have a tight trail and make sure that you take good care of your positions because we're trying to chip away. It's like that movie, the Shawshank Redemption, that spoon, to chip away at the concrete wall. Well, that's what's happening right now. It's a spoon. It's not a jackhammer, even though it rushed up to it. So I want to make sure that we get through 29,840 to really get going from here. Now, how are folks doing? Let me know. Gus, looks like you got it. Looks like a bunch of folks got it. That's amazing. I'm happy to hear that. That is good news. So just give me a second over here. I'm just popping up my chat to make sure that I've got it up and running. Hey, it looks like a lot of folks got it. That's amazing. Well, thank you for sharing. I appreciate it. That's amazing. Well, thanks. Thank you. So I'm not going to name everyone's names, but quite a few folks got it. Okay. And now we're at the 840 marker. Okay. So let's get back to business. I'm getting back to focus on price action. And of course, this can also be done potentially on the ES at this stage. We're at 75.53, above 54, 55. I'm probably going to try a long side trade on the ES. Now, do you want me to put the side-by-side view up here, folks, where the ES is on one side and the NASDAQ's on the other? You let me know, because I think folks like that. So right now I'm trying it. Okay, so I'm 10 points too late on the NQ, but I'm in the trade. Okay, and let me just get the side-by-side view. I know that folks like that. So I just want to make sure that I set that up right for you here. So give me a second to do that. I remember doing it by getting rid of the URL bar and kind of stretching it yesterday and doing a little bit of that business. So I'm just going to get that done right now and get it on screen properly for you. Let's just make sure we've got all the bells and whistles on the screen. And I'm going to do the same thing with the ES as well. It's at 75.55, so darn near close to where I want to take the trade and ride it. So let's see if I can get that one on as well. I'll make this one a little smaller. I want to have the focus on the NQ really. Okay, that should be good. And there we go. All right, so the trade's not in the money right now. Is it a big surprise? No, we've shot up, but we've gotten above a line. Now, do I want to hold it if it's going to have to pull back? I can ride this wave up, I think, because I still have a pretty darn good backdrop from a signal standpoint on the 5-minute chart and the 1-hour chart on the NQ, right? We have not gotten to the place where we've overextended on the triple S indicator to the extreme as of yet. Now, nothing says the market, has to go straight up here. We're at that key water line. We're still within its gravity well. Just to be very clear, even if we go up from here, getting above this, the 840 marker is literally the line, right? Getting above that 840 marker is the line. It's the last volume point of control structure in this area. And we're a handful of points below it at this moment in time to now above it slightly. Where does this move, which is already a big, tremendous risk on reversal, where does this move, reach escape velocity? Above the bottom lip of the mattress, right? That's the next challenge level, and that's at 925. So is my trade in the money? It's not in the money right now. I'm not going to take on the ES trade, obviously. I'm going to see if I can ride this one for a little while because I've got the backdrop of the hourly chart. I've got the backdrop on the 5-minute chart. It may have to come back and test support, rising support right over here. And if it does, I can make the choice to exit if it breaches and if it decides to break right back down. What we need to assess, though, is whether or not it's going to break back down because it can, when you have that buy sequence on the Champion Trend Pack Toolkit end, so it's ended, that the initial buy sequence from 9:35 a.m. Eastern time. On that 1-minute bar, we were in the Champion Trend Pack Toolkit stage 3 of the buy sequence. We had Champion Trend, Champion Cross, a breakout forecaster, and wealth signal. But we've got an absence of breakout forecasters, a 1, 2, and now the 3rd bar, and a bearish speed line cross. That could put us in a spot where we go back and test the last, the 2nd, the 3rd, and sometimes even the 4th last. So I don't want to ride it all the way back to the launching point or, close to it. If we come down below 29,800, 810, I probably am going to kill the trade and look at re-entering off of a springboard lower. If we go directly back up right now, I would need to see the action immediately get me back up above the highs. And then I can sustain the trade. I could actually build the trade. I can perhaps do an ES trade in tandem. And of course, I want to keep my eye on oil. I want to make sure that that's on screen. It's generally in the right direction. I'm not seeing anything that's too traumatic here. So it's moving the right way. It's headed down. It's not yet below the lows that we had at around 4:30 a.m. Eastern time. So the trade is on. I'm trying to ride the signal state that we're in the momentum. It's still early in the day. Looks like the trade is coming into profit positivity. And I'm considering a long now on the ES. And I'm taking one on. Okay. So I'm in a long on the ES. It's only been in force for a few seconds. The other trade obviously has been in force for a while. Okay, and this is a full mini contract, not the micro. So I want to be very careful with it. I want to see if we can get above that marker and rip and run. If not, I'm done. Giving it another second or two. A back test of 55 is not a big worry. But remember, I got in at 58, right? So that's 150 bucks off if it has to come all the way back down to 55. My finger's on the trigger to exit the trade. I don't want to, dump 150 bucks for no reason. I do see a higher probability for it to continue, but it's not doing it. It's an indecision candle. I'm taking my money off the table. So I have to take a $100 hit on that. Now I'm going to leave the NQ trade in force right now, but it too is slowed down, right? It too has slowed down. So what to do at this stage? Continuation should be in play. It should be in play. But the market can do what it wants to do, and we know that. Oil's taking a little dip back down. That was related to this bar right there. So that dip down on oil is taking it down to 72.76 on the CLQ contract. We need to get below 72.40 effectively on CLQ, that is. So right now I'm considering the re-entry on the ES trade because this should be part of a resumption. Okay, so I've decided to try to enter it again. Speed line is going to be my guide, and I may have to flatten it out if it comes down below that fast speed line. I'm not going to stay in it if it doesn't directly launch from here. And look, the expectation to launch directly from here and to pump up with the same amount of vigor shouldn't be there. The continuation in a modest manner should be there more so. Well, that's the nature of already exploding higher out of the gates on the heels of already a risk-on reversal that is quite significant, right? If you go back to the daily chart, we can understand that we were sitting down in the 28,900s at yesterday's lows, and we are in the 29,850 area here. Again, 28,900, and we're in the 29,000, roughly 900. Okay, that's a big move. Okay, so for those who are attempting longs at this stage, or are staying in their longs at this stage, I cannot say no. I'm still in mine on the NQ or the MNQ here. And, I had a couple of fumbles on the ES. I don't think I'm going to try that again just yet. I want to be convinced that, the continuation is there, and maybe I'll scalp a little bit of a long. So I'm going to see if I can do that. We did pulse out to the higher high. Oil is coming down a little more, but it's not yet below 72.40, 72.40, 72.45, somewhere in that area. So, I'll be happy with the long that exists on the right-hand side of your screen. And I'm deciding whether or not I want to try the long on the left-hand side of your screen as we speak. And the NQ is giving me reason to do it. I do feel like I'm missing the rhythm on the ES at this stage, right? I'm missing the rhythm of where I wanted to get in. 58 was the right marker, but I fumbled the ball over there and I didn't sustain the trade. The worry was, hey, the market is already extended and it might not be able to sustain the move. You know what? I've got profit here. I'm still thinking about the ES trade. I'm watching oil carefully at this moment. I want to see if that continues down and then make my decisions. Okay, I'm taking profit on the NQ trade and I'm not taking the ES trade on. Why? I've got a bullish hammer forming on the 5-minute bar for oil. It's in a downtrend, but it's still, the potential for a reversal back up here is there because oil is coming into a local support area. Let me show you this. Now, if I'm wrong and we go straight up, amazing. I just need to see oil at least come down below the low of the last 5-minute bar, right? This bar about, 30 seconds ago was a bullish hammer and it's in local support. Okay, so that's the concern. And that can effectively pull the market back down. So this is the ES, not the NQ. It's on the left-hand scale. Oil is on the right-hand scale. So you've got two charts kind of superimposed on each other. And if oil does decide to come down below the lows right there at around 70, it's probably headed down to 46, and I can jump back on that long side trade and continue to ride it. What I'm going to try to do is take it on the ES this time and see if I can get a pop out of it. So I'm watching oil on another screen, and I'm gonna, manage that as we're moving on here. I'm just getting messages from about my kiddo now about how sore he is, and not now he's feeling the soreness from our gym adventure yesterday, and he literally is writing me, my back is annihilated. Such colorful language for a 14-year-old. Okay. And it's good to know that he's also human, though. All right. So here we are. That concern on oil seems to be clear and present. I'm glad I took my trades off the table there. The question mark now is, is it done? I don't think it's done. Okay, I don't think we're done. I think that there's still going to be another opportunity for a run back up, but it might take some time. And this is unfortunately, or fortunately, depends on, I guess, which time zone you live in. There was a point in time where trading the North American Open was just not the thing to do. It was just a Eurozone session. It was the Asian session that really had all of the action. I remember that being consistent for like weeks, months. This is a while back now, right? So this must be, closer to COVID time or before, somewhere in and around there. What I've seen in the last few days, really in yesterday's market, in the morning session in particular, is after a big move is already in play, you sit there and you go, I want something that's like that, but it's already done. And there's just not as much fun because the gas is not there in the tank to make that kind of move happen. But an orderly grind up, there's nothing wrong with that, right? It's just the hard part about an orderly grind up in an overcooked condition is, can you sustain the little slips back down? And look, we've come back. This is a 1 minute chart you're looking at on the NASDAQ on the right-hand side of the screen in dark mode. We ended stage 3 of the buy sequence by way of having an absence of these dashes on that bar and that bar, coincident with the bearish speed line cross, which is the cyan or blue speed line crossing below the slow. So what that remarks is the end of this buy sequence, which started technically at the 9:35 a.m. Eastern time 1 minute bar. Now, what usually happens is we'll test the last, the second, the third last, and on a 1 minute chart, the fourth last. We've done that already. Okay, so if we're going to bounce now, I need to see price get above the speed lines forthwith, or we can be coming right back down to launch zone and dip our toes below the channel before a reversal back up. So no long side trades as of yet. One of the hardest parts of trading is waiting. The second hardest part of trading is knowing when not to trade in the direction that the market is primarily going. And then, of course, the third is when to trade in that direction. So the waiting part and the not to trade, we're getting a good dose of that right now. Let's see if we get a reversal and a resumption that I can latch on to on both sides, on the ES and on the NQ. And the worry that I had was real, right? That worry was real. I saw it coming. I saw local support for oil. Oil is the red and green bars, and you can see that oil is ticking up a little bit and the market's stagnating. Now, oil has not given me a swing low formation to say it's headed back up, to the $74 marker. It's not done that yet, but it's threatening it. And if it's going to threaten it and it's successful, we may have a pullback in the market that sustains for a while. And even though we want to trade up, it might not become real. But right now, I'm getting the push back up. I'm not worried about it right now because the NASDAQ is saying, I don't care. Oil's not going to go anywhere. I've joined in the trade on the long side there, and I am considering joining in on the ES above the high. And of course, I want to manage it very carefully along the ride here. But give me a second here to make sure that I'm comfortable with what I'm doing. Okay, so I think I should be comfy. I don't think I'm going to do the ES trade just yet. I'm going to ride the MNQ. If I can get the ES trade, I want to see the NASDAQ really launch it up. Is the ES taking over and actually starting to lead? I don't know. And that's one of the things that I want to determine. So oil's in a draft down, which is supportive for the market to continue up. And the NASDAQ has been pulling the ES up. Both of the indices on statistical cones, like VWAP cones, are very extended. But we're in the location where either it goes, 1/3 of the time it goes parabolic and continues up. 2/3 of the time it's going to attempt to mean revert. So we had an attempt to mean revert over here, and we met with rising support. We bounced up. I took the trade a little late. I was looking for it above the speed line, so somewhere closer to 860. I got in a little late there, around 890, but it's still a valid trade. The question mark now, is it good enough to continue to hold, build? We shall see. Okay, so we're getting a little stretch up on the ES. I like what I'm seeing. Now back test the speed lines and bounce. I don't want to see it go below the fast speed line, not below 62.50. Same sort of concept here on the NQ. If we're going to continue up in typical fashion here, we should be holding the fast speed line, which we are. But there's always a point where profit taking is valid, and I just took some profit. Now, my concern at this moment is not grave. I don't think that we've got that kind of concern. We are extended to the point where things are very, very stretched. And that was one way for me to show this to you fairly easily. I'm going to do that right now, so you can kind of get a good sense of it. And this is, again, part of a layout that's available on our Incredible Wealth charts. Bear with me for a moment here, folks. Constant messages that I need to stop distracting myself with. Okay. Let's continue on here. So what you have on your screen right now is a statistical cone, right? So this statistical cone is called a volume weighted average price cone. It's cash hours only, and that's why I'm using the Qs to represent it. So right there, okay, all the way to here is yesterday. VWAP is the center of the cone, and these dots and lines are standard deviation lines. When you're above VWAP, good. Okay, when you're above the pink line, you're in the uptrend zone. When you get above the red dots over here, you're in a move that should accelerate. When you get above the thick red line, it's 2 standard deviations above VWAP. It gets really scary. We're very stretched at that point. So if I look at where we're located now, it's still a little early to really fully use today's cone values. We have to just consider it against yesterday's values, but we should also look at the location and what does it say? We're in a very stretched area. We're more than 2 standard deviations above VWAP, which means what? Either it performs here or it will pull back to VWAP, before it can bounce yet again, or before it has a more stable bounce. So want to be very aware that that is the condition that we're dealing with at this moment. Okay. So just back to, so I pulled out of the way. And another way to go at this, right? Everyone has a different way of looking at the market. Some people use cycles of the moon. I'd rather do things that are, more clearly related to, the rationale of the auction process, supply and demand, trends, and then the technical tools that become strategies that everyone starts to lean on and becomes a self-fulfilling prophecy. So from my viewpoint right now, I've got this aligned buy signal state on the hourly chart for the NASDAQ, the 5-minute chart, and the 1-minute chart. I've also got the market moving into another minor resistive structure, which is around the 925 marker. And if we get above it, I am considering the entry for a pop of 10 to 15 points, but that's not looking like it's going to be available at this moment. So let's go. Let's go and take a quick look see at what that 925 marker is. Okay, it's something that we discussed in the pre-market. I gave you the market structure, the key levels that we have to deal with. Above 820, 825, then above 840, we're rising up into the bottom lip of what I call the mattress. What's the mattress? It's the center of the weekly pivot lines. And I use 2 weekly pivot strategies, superimpose those lines on top of 5-minute charts, daily charts, all types of time frames. The bottom lip of the mattress is the Fibbo weekly balance pivot level. It's at 925. Above 925, we open up room to get up to the 30,100-ish area overall. So at this moment in time, bear with me for a moment. At this moment in time, we're challenging that line. Okay, so let's go in and take a look at the technical picture to see if we've got enough gusto to get through it and trade long above it. Now, taking on a long on a pullback back up to it could also become the option. I'll keep my mind open to that. But we know we're moving into a known resistive structure. So I hope that that was a super clear for folks overall. George, you're right. Oh, you make me laugh. Oh, I can see. So the hardest things in trading: patience, knowing when to not take the trade in that same market direction because we're moving into resistance, and then knowing when to. Right. So when not to and when to are, and of course we want to be trading in the direction of the market overall. We want to trade with the trend. We know the trend is up. We know we're moving up into a resistive structure. We know we've gotten through a major water line. We know we're extended. Okay. We know that we're in a spot where that extended condition that we're in means that we might be out of gas. So we need to be able to take that into account. Okay. So I'm seeing consolidate and continue type pattern in play. I just want to make sure that I have nothing in the way, nothing really changing on the signal structure here. 5-minute chart looks fine. Stage 3 of the CTP sequence, riding the speed lines, engaging with both. Last 5-minute bar had a breakout forecaster and a wealth signal. So I'm not seeing anything that says it can't directly continue, but it's probably going to be modest. 1-hour chart. Obviously, we've changed hours now. Just did that a moment ago. Last closed bar has a breakout forecaster. We're in stage 3 of a buy sequence. So it just needs to pause. It does not necessarily need to pull back from a technical indicator standpoint. It doesn't have to come all the way back down to the lower 29,800s. The signal structure is good enough to say it can just directly continue. So I should be looking for a breach above 925, 930 as an execution moment. And then we have to know where we're going, right? So I've already established that if we are able to bust 925, we're in a market move that can take me up to 30,095, 93, 95 points. There is a little stopping point in between, right at 30,000 and change just slightly above. That would be 30,000, about 14, 15 points. Okay. So right now, no trade, right? We're trying to chip away at that next structure. It's a mathematically generated structure. It should be no surprise to those who are here from the beginning of the session. I already communicated the structures of resistance on the way up. And it shouldn't be a surprise that it's working as resistance. So elaborating on when not to trade, and when to trade in that market direction. So the goal is to trade with the trend, right? The election not to trade is when you're in a spot where you've run out of gas. Okay, so you need just bullish fumes. You're very extended, very stretched, and there's a better chance for reversion to the mean, right? Which I've discussed, and I kind of embed the analytics that I'm doing. This is a process that I keep going through constantly, so I can help identify the best decision probable at that moment in time. And another key reason when not to is you're seeing a cross current from an asset class or an inside area of an index that's pushing the wrong way versus the rest of the market, and it's big enough to do damage. So that requires looking inside, and it's not that hard to do because we know that the Nasdaq's controlled by about 5 to 10 stocks. So when you have cross currents internally or externally, cross market, when you're out of gas, when you're statistically very far away from normal, even though the trend is still up, you're coming right into a major resistive structure. Even though the trend is still up, I don't want to be trading that at that moment, right? Out of gas, not a good thing. Extended very far away from normal. It's that adage, momentum traders like an overbought market if they're trading long, because overbought can get overbought-er. Okay, so I'm going to try this entry right now. Okay, it's a very high risk moment because I'm trying to buy the potential turn. Okay, and I don't know that it will succeed. Okay, so initial sign was that, yeah, it's trying to, and I'm buying it into the resistance structure of 925, right? Which is not what I wanted to do, but I want to give myself a little cushion as we're trying to approach it. If I have a little bit of a cushion and then we blast through 925, I could actually use that to add another contract. So it looks like the decision is correct. We're still light on gas. We're still rising into a major resistive area. Okay. We're still very far away from normal. So all of these things together, I was able to push it to the side, size it appropriately, get in, and I'm still very tentative on this trade, but I was able to get in on the basis of what? The technical resumption of the buy sequence. So I want to trade in the direction of the market. I know that this whole thing is a consolidation process, and I can easily see it come back down towards lows here and break, right? That can easily happen. I'm going to use those very fast acting, moving speed lines to help me with my decision. I don't like what I'm seeing right now. I'm not exiting the trade yet. And exactly, Joe, that is the rationale. And I'm doing this to demonstrate at the end of the day. So I'm just not seeing it push through that next structure of resistance. It attempted to. It's not successful as of yet. We've not made we have a couple of tails on the candles in the champion cross zone, this little green opaque zone here. This is what I don't like. My indicator is showing a bearish crossover imminent. I'm out. I see that indicator back up into the upper quadrant. I can come back into the same trade, or I can take a pass and I can wait for the actual breach at 925, 930, either or. At this stage, I am probably going to wait for that breach. I'm probably going to wait for that breach. Okay, temperature check, folks. How are folks doing right now? Let me know. I know we've already had the burst up. We had one little continuation move. I hope you're able to get pieces of both. If you're continuing to play at this stage, question mark on whether or not one should be long or not. I'm trying to answer that at this moment. And I've obviously answered that. I've pulled out of the trade because I didn't see it continuing. So it's raining cats and dogs over there. It's going to start raining here soon too. But we want to make it rain in a different way if possible. All right, that's great. I'm happy to hear that from folks. Okay, so now the constant analytics to help. That's amazing. I'm seeing some great results in there. That's great. Long Baba, eh, David? I haven't looked at that play in a long time, so I'm curious to know what's going on over there. It must be having a good move. Okay, so what I want to do right now is I want to just recenter everyone on how can the next long side trade materialize. What do I need to see to hit the button and go long again and trade with the trend? So you can make it really simple and buy the breach of the 920 to 930 area, which we know is a resistive structure for the NQ. It's the bottom lip of the mattress, or the center of the weekly pivot range, which is the blue line and the purple line here. So we could just make it as simple as that. Okay. The alternative to that is come back and back test the speed, not the speed lines, back test the volume points of control lines here. Between 840 down to about 820, and then look for the bounce up off of it. Okay, those would be two very, discrete, clear, patterns or behaviors that we would want to see that can be useful. And then everything in between is really going to have to be managed by, can we get above technical structures? Do we still have rising support? We're on a 1 minute chart over here, and we're in a kill zone on a 1 minute chart. Falling resistance above price, rising support below. So the bare minimum is get above 885 if one wants to try along. And on the ES, it would require us getting up above 59.5 a point. The other thing that I'm trying to think through right now is this getting toppy enough to bearishly reverse? Oil, back to oil. Is oil building support in an area where it's had support earlier this morning? And yeah, it is. So around between 3:45 a.m. Eastern time to 4:30 a.m. Eastern time, it was in a support zone where price is right now. I'm seeing breaches happen right now that are fairly significant. Fairly significant breaches are happening right now on very short-term time frames. So let's not get too uppity about it. But we're coming back down to the 830, 840-ish area. Okay, so now's the test, right? So we're coming back down to the area. That's the water line. I'm not really seeing oil fall or rise. It's very indecisive. So the opportunity for a resumption is in play here. This would be one of the areas, or it could require us coming all the way back down to the launch zone itself from about 935. I vote for it being able to hold here, but let's not vote. Let's just go look at the multi-time frame view here. Where's the breakout forecasters that we'd have to test over here? So 800, 790, 785. Okay, we're probably headed down to the high 700s. We're already in the low 800s. We're coming down below that key set of nested volume point of controls. Now, this is the next opportunity area where it can reverse. And on the ES, it would be our line in the sand for the week, 75.45. Right? We got above our 55 water line. And now we've pulled back down. We've got the pre-trade conditioning pattern for the short on a 1 minute chart of the ES, similar to what we had here on the NQ. We have a short setup. Yeah, but it's already done, and we're coming into local support. So is the market going to give it one more go? Are we going to get one more try for trading in that direction back up, or is the market giving up? I'm seeing more, chipping away down for oil at this stage, which should start to support the market rising again. We just need to see it break support. So oil is the red and green bars, effectively coming down into support that was built between roughly 3:45, 4:30 a.m. Eastern time. It's trying to come down in and breach it. Hasn't breached it yet. Remember, we talked about this earlier. We said, hey, we would like to see oil below 72.40. Below 72.40, it should probably support a rise in the market. Okay, so we're getting very close to that area. Obviously, price for the ES is coming into a support area, which is effectively where we launched up from. Okay, and so is the NASDAQ. We know that we're in a buy signal state on an hourly chart. Yep. So that's the trend in direction that I want to trade in. We're testing the fast speed line. It's perforated it. This is an area for a bounce. Take a look at the 5-minute chart. It ended the buy sequence. Absence of breakout forecasters here and here, a bearish speed line cross. It's come back to back test the breakout forecasters, which should act like springboards. Now, the 5-minute chart is technically in what would be called a kill zone, falling resistance above, rising support below, but we've got the echo chamber of the bigger time frame saying up is still likely going to happen. So can I try along here? I'm not in a buy signal state on a 1-minute chart. I'm not going to buy it into the falling resistance, but I can try it above 850, the center of the MSR channel. That would be the area. I didn't short. No, I haven't shorted it. So Joe, the oil ES layout, yeah, I'm happy to share, share it with you, but I'm going to teach you how to do it in a second on your own. So we're just continuing down right now. We're coming down to test all of those breakout forecasters and breach them. So this is not good, right? This is a bearish event, but it's coming right down into the major support structure that was built leading into the open. So those who are shorting it here, all the power to you. Just be careful for a reversal that can happen very quickly in this area. Yeah. Now, of course, with hindsight, I'm kicking myself that I didn't short it. That's okay. Don't let that emotionally disturb the trader. Just look for the next logical area where this thing can become a buy. But if it can't, it can't, right? We're coming down to challenge structures on the hourly chart, like the slow speed line, the top of the champion cross zone. The hourly chart is still bullish, and we're back testing rising support. So this is really the area where I would like to see the potential for a reversal to start forming. The 5-minute chart's aggressive in the sell signal state, and it's below all support structures. And of course, the 1-minute chart's aggressive there, and we don't have any intermarket issues. They're both coordinated, moving down at similar rates. So for those who are actively shorting, I understand it. Okay, you get the NQ back up above the slow speed line on its 1-hour chart. I'd want to get the heck out of shorts. Right, this should be the area where it tests it, scares everyone, tree shakes, fruit drops, low-hanging fruit gets picked. Some stuff drops to the floor, but that slow speed line there, which is valued at 725, is really it should be a springboard, right? You can wait for 725 to be tested and then get back up above the fast speed line to execute. You're still in the lower third of the overall range of the bar. So I'm thinking about an entry above 725 long, an entry above 785 long, an entry that I can consider not too far away from the now. So we are midpoint of the two. 785 gets me through most of this dump bar. I'd rather do it there. If I wanted to short this at this stage, I'm late to the party to short it. So I'm gonna just be transparent. I missed that, and I'm not gonna chase it. And Tony, you might be right about that, right? So let's see if it wants to build a base here and continue. And really, I'm watching oil. Joe, I know you asked about how to get the double these two things on the same screen. Just when you open up a chart of oil on a 5-minute basis, and then if you want to put the ES on it or the NQ on it, just type in the next symbol. Like if I want to put the NQ on, I can add a third one to this as well. I can go in and add NQ to the mix over here. I'll just do that as well. And instead of just clicking on it, once you can just start writing, click on the chart. You can just start hitting the keyboard, NQ. So I'll just put NQ1 in there. And instead of just clicking it, see that little roundabout? It's an add it as a compare, right? So it will then add, the next symbol in there. In this case, let's see if it did it. I might have left it. I left the template open overnight, so it's not doing it. But that's on me. But you can do it with a fresh template, and it should work lickety split. Okay, so I'm seeing breaches that say continuation down in a very oversold state. I'm trying a little scalpable short. If I'm not going to get direct progress lower, I'm getting out of the way. Because this is either it's going to dump and make a lower low, or this is the reversal moment. Pressure is still to the downside. Okay, I'm going to get out of that. Look at the compression in the speed lines. It's happening. Risk reversal should be imminent to risk on. Oil's not giving me enough guidance at this stage. It's not breaking down as much. ES is dragging the NQ down though. So, and we just made a lower low. You can't deny the directional shift, obviously. On the 5-minute chart, we're in an official sell signal state, and we're coming right back down to where this whole thing kind of really started at around 6:45 a.m., 6:50 a.m. down here. The center of mass of support should not be lower than 630 to 670 in this area. And we're in it. We're in that zone right now. If one is holding on to shorts right now, I wouldn't, bat an eyelash at it. I'd be, yep, that's still valid because we've broken key structures. But just be aware that you're in an area where if we don't get direct progress to the downside, okay, I just did a rather large on a separate account scalp short that generated about a couple of grand actually, which is pretty darn good. Yeah. But that's another conversation. Right now, I just want to keep this orderly. So let's go and take a look at whether or not the reversal can actually happen here or not. The damage that's been done on the 1-hour chart is not good, right? We've broken below the speed lines, and that's a problem. Now, as we approach the center of the hour, I do need to take a just brief pause. So I apologize. Okay. This should be the area for a reversal. This should be the area for a reversal, but it has not reversed yet. Now, the hourly charts come down to test the top of its MSR channel. It's where the last breakout forecaster is. It's roughly 29,600. The 5-minute chart is still in a sell signal state that needs a reversal back above roughly 670 to 700 to get me thinking that, you know, we're actually in a turn. I want to see a turn on a 5-minute chart in order to buy it. Not at this stage yet. And Frank, you're right. Right, and 75.15 is also the bottom lip of the mattress, right? In our weekly pivot levels. Between 15 and 35, there's issue. Above 35, there's a little bit more upside. Okay, so again, let's see if this risk reversal wants to actually take place. You know, calling the low and then getting into it is not what we're trying to do. We want to know that the low is in. We want to know that someone has actually established it, and then we can go from there. Okay, folks, I need to take just a brief pause. You know, I'll be back in you know, probably less than a couple of minutes. So hang tight here. I'm just going to go off camera briefly, and then be back with you in a couple of minutes. Just need to go grab some hydration. All right, I'm back at my desk. So thank you for that little pause there. Needed to get a little hydration in and feeling a bit better. So ready to go. Now, one fun thing that we could do over here. Exactly, George. There it is, the bio break trade. It worked. So one of the fun things that we could do is say, hey, let's call the bottom. Let's get into a long and see if we can ride it up. Have we actually had enough improvement to support that? Above 750, I'm gonna try that trade. Where we effectively say, okay, we've had a substantial enough turn after the dip, and it's going to then attempt to re-rise back up towards still falling resistance exists up to 83, but I'm willing to try the trade at around 750, even around the 750 to 760 area. And the basis of the trade would be the chart that looks out 3 to 6 hours. The hourly chart has dipped, it's bouncing, it's trying to give us a reversal signal and wants to try to get back on track, right? The obvious damage is, you know, the dip that's come back down significantly lower than the low of the 9 a.m. bar, but it's dipped down into a support structure, rising support, springboard, and that's working. So here we go. So I'm going to try that trade. And I'm going to see if we can just ride it. It's probably going to struggle a bit and potentially come back down. I'm going to try to hold on to it for quite some time. Let's see. Now, if it starts to precipitously break down, there's no point. But I'm going to try to continue to hold on to it. And I'm looking for that risk-on reversal now to remain in play. And it can be added to potentially above 780. Or that could be the initiation moment, right? That could be the initiation moment. And I agree, Fuad, we'd be in buy zones above 780, right? On the smaller time frames. So I'm taking a higher risk entry. I'm seeing the ES pop up. I'm seeing the interrelationship between oil and the ES change a little bit. You know, oil's not coming down. It's actually rising slightly. But we do have the market trying to retrace back up. I got to an oversold state, it's trying to get out of that right now. So I'm in the trade. Let's go down to that 1 minute chart. Above 780, it could grow. This is also an area where the whole thing can fall apart again and come back down. To make a positively divergent lower low even, right? So be very careful. If one is in there. Now, the trade was in the money. It's slightly out of the money right now. I'm still leaving it at this moment. I think the responsible thing to do is if we see a 1 minute bar close below the slow speed line with such a high risk trade, want to kill the trade and then re-enter when it's back on track above the speed lines. But we've had a speed line crossover. That's happened off of an oversold state in a location that is logical, using market logic, which is kind of where we built our little base to launch up, heading into 7 a.m. Eastern time. We built that little base and launched higher. We've come right back to sniff it out as support, and we've pushed right back up. We've gotten through a major resistive area around the 740-ish, 750-ish area. And now we're trying to push through, the high that happened right back over here. And so far, so good. If one is trying this on the ES, just be vigilant, right? It's the same sort of trade. We've come down to the slow speed line, right? So if it breaches, it can slip and fall very quickly. So having a stop in below the slow speed line or very decisively acting, to get out of the way below the slow speed line on the 1 minute chart would make sense. And Fuad, that's a good point. Using Rob's ITP throttling tool, it's going to come back up likely within the next several hours. Waiting for it might be more prudent, especially if this test of the slow speed line does not, hold, and we end up seeing a bearish speed line cross, which may end up happening here. I want to get out of the way. I think that's the responsible thing to do, and I'd rather get back on the horse, knowing that the speed lines have realigned for fast speed line above the slow and price really above the channel, right? So you can have a more accelerated slip. So that I was ready for the responsible exit. I took a high risk entry. It was in the money a little bit, got out of the money a little bit, and then the risk of it slipping, grew very, very quickly. And this slip is not necessarily one that has to take us down to lows. That's not a necessary thing, but it can happen, right? It can happen. Now, the hourly chart still got a good backbone, right? The slow momentum line with the triple S tool is still pointed up. But the fact is the triple S line went from the perform or plunge quadrant 4, down into quadrant 3, which indicates mean reversion. And again, we got very, very far away from normals. We've mean reverted. Have we actually come back to VWAPs on the day? Let's go and take a look at that. And then we can continue on the conversation. Yeah, we've done that and then some. Remember I showed you the VWAP cones earlier? We came down below VWAP. We got 2 standard deviations away below normal, normal being the center line of that of today's statistical cone. And we're trying to now get and hold. We've already gotten above it. This lime green line, that lime green line is -1 standard deviation below VWAP. I want to see if we can hold above there. If we can hold above there, we're not in the downtrend zone. We get above VWAP, we're back to cooking with gas and up, and away we go. Still in a market that has already had the majority of the up done overnight. And Suraj, if you want that VWAP chart, you can, I make this template, this layout available to every wealth charter out there. You can just simply go to the hamburger menu. You can go down to where it says layouts, click on premium, okay, scroll down, and you'll find a layout. So think about the layout as a house. What do we have in a house? We have rooms. So when you click that, you'll see dashboards above, at the top here that you'll be able to scroll through. I think you'll have about 4 of them. The one that says day trade 2 is the one that you're going to want to click on. And I've just exploded the daily VWAP cone chart within that dashboard, right? So that's this one right here. I've just made it full screen. There's a lot of other bells and whistles there, but this is the piece of analysis that's going to help me choose whether or not I want to get back into that long and and stay with it strong or not. And right now, it's still a waiting game. Right, we're trying to get back up. I think that we're in a spot where this should bottom. I'd like to see long again. I can try the same sort of trade that I did before, but this time with an actual bullish cross on the speed lines. I could wait for the upper half of the 1 minute channel. I could wait for the top of the channel to be breached. They all come with different levels of risk. I think 780 makes more sense to trade long above. And then we know 780 runs into resistance at, between 820 and 840. So we know that already. But we've already been there. We've come through it on, from underneath and from above. So it's well traversed. The ES is in a decent cup and handle type pattern as well. Above 755, it can become a long. And Ray, I know you're asking about the triple S 1 hour chart. I'll go in and define a little bit more in just a second. If the opportunity for this long is really materializing, I want to try to take it. So we're coming up. We're almost above the top, well, in the upper half of the channel. I'm going to try it here. Small size. I'm going to try it as well on the ES. I'm going to wait for some stability above 75.55. Because we're not through VWAP yet, right? We're not through VWAP yet. There's VWAP. We're not through it yet. We're trying to get to it. So that in and of itself can be a trade. And then the better trade will be get through it. Get to it and then get through it. So I'm going to try long as well on the ES. Now, the last bar didn't quite give me exactly what I wanted. We just closed a tick or so below 75.55. I'd like to see us above 75.55 for the long on the ES. So I'm in now. I'm pushing the limits on this, obviously, because we have not yet cleared it and launched, right? And it's going to be harder to hold on to, but I've got the backbone of reversion to the mean in play in an extended market, right? It's still trying to revert, but my trades are not in profit positive territory yet. So I have to be very, very careful on both ends over here, because if it wants to dip harder, it can dip harder and just ruin the account completely. I'm gonna have to take an L on the ES trade. I'm gonna hold on to the NQ trade for now. It's just it's a micro, but the timing for the breach has turned into what looks like a double top now. If it comes down below 75.45, double top comes to fruition. I don't think that that's going to happen, but there was too much risk to hold on to for that trade, so I had to get out of the way. So I'm going to focus in on the NQ trade and just continue to see if I can work it. If it wants to come down below the tails of these candles in the 720 area, there is more risk, but this should be a coiling pattern, right? We've already had a dip. We've come up. We've started to coil. Now, ideally, we don't see anything below 720, and then it reverts back up and tries to come up to the top of the coil, which would be around 780, breaches the top of the coil, boom, up, and away we can go. And Jamie, I wouldn't really consider it to necessarily be a range day. You know, you can look at the 5-minute chart and go, this is a day where we have come from, well, actually just do it on the 1-hour chart better. We've already come from a deep, dark place, right? And reverted back up. So if we go back to the lows that we had yesterday, so that's yesterday, that's the 5 a.m. Eastern time hourly bar, right? We had our push up into the open. It didn't last. We got hammered down. And I remember trading that short on the way down. And then we got Trump speaking, squawking, and back up we went. And we got up to and then through as we moved into, past his talk, past the bond auction at 1 o'clock, and past Warsh's FOMC meeting minutes. We continued back up, and we've been trending up. So we're in an uptrending market into the cash hours open, and then from there, sure, you could say that we've had a range that's been established. The high of the 9 a.m. bar, high of the 10 a.m. Bar are very symmetric. The lows are very symmetric to where we started at the 7 a.m. hourly bar. So you could call this a range, but I still see it as part of an uptrending market overall. So I think that we got the right entry. I didn't have the risk tolerance to hold the long on the ES. I'm sure some of you have, and you're doing well on it right now. Let's zoom you down over to this here on the 1-minute chart. So don't want to call the bottom, catch the bottom. We want to be able to identify that a bottom is real, and then catch it at a spot where it gels with the risk tolerance of the trader and has a better chance to work at a market level. So are we in a buy signal state on a 1-minute chart right now? No, not yet. Not even on a 1-minute chart. So it's not yet, through the technical hurdles that will say up, and away. It's trying to get to that point. The trade's slightly in the money. That's great, but it can implode. We can have slips and dips back down. But the good part about this is a coil, right? Or an ascending triangle pattern. And we have breached the top of it, which would be around the 780 marker. But in NASDAQ terms, have we actually gone far enough up and away? The top of it would be, around the 775, 780 marker. We're just a smidge above there, right? Now, who's in this trade? How is it working for you? Feel free to share in the chat. The idea here is into the end of the hour, into the end of the Eurozone session, for example, where volume is going to get lopped off at 11 a.m., is the retrace of the mid-morning dip, the directional trade to take. All signs point to that being the case. All signs point to that being the case. So at this stage is just waiting for the next, bigger sign that it's going to pop up and not, just dissolve. So one of the things that one can watch are these little oscillations of the speed lines on the 1 minute chart. I'd like to see this not be a bearish cross, because then I'd want to lock in my profit and then re-enter the trade. Right now, I'm just going to still hold on to it, because we are coming back to back test broken resistance. So it should be tested as support. And the idea is it continues to grind up, but it's still not in a buy signal state. So at some point, I'll want to just take profit and then re-enter. I'm taking profit, right? That I'm going to re-enter now above effectively 795. If we can get back above 795. And I would be doing the same sort of thing if I was on the ES, right? The exit would have been 57. And Ray, it's up to the individual trader, right? In terms of the size to use. Because I'm demonstrating and I'm trying to see if the retrace happens. I'm going to use the smaller size at this time, but probably next week flip back to the full ones. And Michael, I see you've asked a question. How do you unlock a suspended account on wealth charts due to the daily limit being reached? I don't think you can. I don't think that you can, right? You'll have to trade a different account from what I understand of the nature of your question, Michael. So this is the Michael O. Okay, back at it. Let's see if we get a push back up above structures of resistance that can open the door again to go up. And Anka, next week we're going to be at the biggest, best Wealth 365 summit ever. It's a historical moment, with all of the partners that we have at Wealth Charts. There's going to be over 1,000 evaluation accounts given away, prop evaluation accounts next week during the week at the summit. There's going to be a week-long trading competition. Another firm sponsoring that. And they've got some insane prizes as well for that trading competition, including a cash prize. More on that in another segment. Okay, so here we go. I said 95, right? 795. We're trying to come back up to it. Trying to see the triple S line move from the bottom quadrant into the second. If we get through the slow momentum line, obviously that will be above 795 at this stage. But that would be a good sign that we're going to carry on higher into the end of the hour, which is, let's vote on it. Do you think that we're going to rise into the end of the hour? 7 for yes, 6 for no. Yeah, so next week, there's not going to be regular sessions, right? So next week, there's not going to be regular sessions in the rooms that I am in. We're going to be at the summit next week. But for ATR members, I'm definitely going to be doing strategy videos and PDFs and all that stuff to make sure that you're well prepared. Okay, let's see what folks are saying. We've got lots of votes for 7. It's about an 85-15 split. Run up into the end of the hour. So it's leaning to run up into the end of the hour. So let's see. So at this stage, it's a slow grind back up. The market is trying to tell us that it wants to retrace the dip that it had mid-morning. The nature of the market day that we are in is one that is a risk reversal. It's a risk on reversal from the damage that was done at 4:15 a.m. yesterday. So you can see that more cleanly when you look at it on the hourly chart. So when you look at it on the hourly chart, you can see yesterday. Now we had that dip down. That was on the 4 a.m. Eastern Time hourly bar, followed through modestly, and then started to get our bearings back. We simply came back to the waterline of the drop, and we had another dip, right? It was when Trump started squawking mid-morning that things started to pick back up, or midday, actually, things started to pick back up. And that was just in time for a big 10-year U.S. Treasury auction, which, it's not coincident that I think it is orchestrated, the timing of his press conference. And keep in mind that the bond market and the job of the president is to get more of the foreign countries to be in U.S. paper, because it beefs up the coffers, obviously. So that job was accomplished, and then we saw through the afternoon a modest rise until we get up to the top of the channel. And then we started to see the continuation build from last evening onwards as oil came down, which was good for those who are trading overnight, obviously. As we got into the open this morning, we were still trying to come up, and we did. We had a big push up, a little excitement on the first bar, but we reached a limit and could not trade above it. And we had a reversal back down that got a little too hairy, but we've come back up off the low. And into the end of our, the trading time that I'm going to be doing with you today, which will be 11 a.m. We just asked the room, hey, do you think we're going to run up into the end of the hour? So I've been holding on to this little micro long on the NQ, but it's not working. And we're not coming back up above that water line. So at a certain point, one has to decide, where to cut it. The real cut point would be down over here, 727. But a cut point could be right over here at 755. On the ES, it's 75.50. Those would be cut points on the trade. And I'm seeing that too, Jimmy. And exactly, Dwight, you can just type in the continuous contract now on wealth charts, and it'll trade the front month, which is pretty darn cool. Now, what we're dealing with is this, right? We're coming up to VWAP on the day for the NASDAQ. There's VWAP, and we've reverted to the mean. We have not gotten through it. So the trade that I've taken is to get to it, and then I want to take a trade through it. We're just not getting through it at this stage. Now, the bet is that it likely does, but obviously one has to be able to tolerate some risk if they want to be in the trade to VWAP and then through VWAP. So we're about, 9 minutes into the end of the hour. Do you know where your trade is? This one's not working. It's not a big loss or anything, but I don't want to, sit there if it's going to get worse. So I'm going to wait for a little bit now and be on alert. If we come down below 50, I'll probably want to cut it. I don't like the fact that my indicator has come back down from second quadrant into the first. It's crossed the fast momentum line. It just shows more risk. So my finger's on the trigger to get out of the way, but haven't done it as of yet. ES is still holding. You can see it on the left-hand side of the screen. It's still holding the channel. Okay, and it's trying to actually lift things back up. It's not in a buy signal state. It's in a sell signal state, right? The 1 minute chart there. So right now we're coming down below the bottom of the channel. I'm not interested in sustaining it. We'll probably bounce back up. I'm going to have to take a small L on that and get back on again, only if we come back up above 770. Now, when we voted as a team on the direction of where we go, where the market goes into the end of the hour, it was about an 85-15 split for up into the end of the hour, and we'll see. It's not looking like that's the outcome. We're getting very close on the VWAP cones to coming down below an area where we move into a downtrend zone for the NASDAQ, and that's not going to be a happy thing. And if it wants to run down into the end of the hour, could try a short, but it's not what I want to do on this market move. I think that we're just seeing profit taking on the remaining bullish longs in play because it didn't continue to rise. So for those who bought down in this area, profit taking is happening here. There'll be another tranche of profit taking if we come down below 700. Below there, I could short, but not here. And the long, again, is standard fare, but it's slowing down at this stage. So yeah, we'll wait for the end of the hour. We'll take a little break. We'll come back, do a little Q&A, see if there's any other trades, into the midpoint of the day. If one wants to try a directional trade into the end of the hour, and you put the proverbial banana to my head and said, make a decision one way or the other, the short would be better below 700, not down to it. The long would be better above 780, not up to it. Okay, but time is ticking away, and those would be the two best comments I can give you. We get above 780, I'm going to jump back into the long. Okay, so it's trying again. We're getting very close to the line. I'm going to see if I can get that little runner into the end of the hour. It's still not the optimal area for the long, but the ES is strong. It's above the channel. It's helping the NQ. I'm taking the trade on, looking for a continuation up to the 825 to 840 area. I'm going to exit the trade if we come down below the fast speed line. If it does not want to continue to progress, not interested in being there. The fast speed line is sitting at 65, and we're coming down to it right now. Right, we've tested it, bouncing as we should. ES is trying to push us up. Oil is pulled back down. Markets are more primed to go up into the end of the hour from a cross asset basis. The technical signal on the hourly chart is the backbone of the move overall, and it is still a buy signal state that we're in a go long signal state. We did have the damage coming down below the speed lines into the champion cross buy zone, testing the breakout forecaster, which acts like a springboard. It sprung us back up, but are we following through back up to the highs and are able to get above? Look, we're in a market where we've already seen the majority of the gains happen in the pre-market overall. And as you saw earlier from the conversation and the analysis here, there was a couple of challenge lines, right, that we were dealing with. One was, of course, getting up to the 820 to 840 area, and then above it was the bottom of the weekly pivot, the mattress, the weekly pivot levels that I use. These are the two, there's two strategies. This is the bottom of the balance area. We got right up to it, but could not actually poke our hairs above. And obviously you can look left and go, hey, there's resistance there. Yeah, it's mathematical, behavioral, it's all there. And it's this area that's the most important at the end of the day. If we cannot sustain above 840, 820, somewhere in this area, let's just call it 830, because the zone is 820 to 840. So if we can't sustain above it, it's not good news for a continuation up towards the top of the coil, or to make higher highs. It's bad news if we stay below it. It would imply a pullback. Right? So on a day over day basis, one wants to be very careful with that. Let's go and see how that trade is doing right now. Slightly in the money. Are we at the end of the hour? We've got another minute or two to go. So it looks like the communal vote was accurate. Let's not get too excited about it, because we're still not through structures that will say it just goes up, up, and away. But we are pushing up. That's a good pattern on the ES, getting very close to the local high structure, which will be 63. If it can get through 63, there's another 63 and a tick. There's another leg up likely. But as you can tell, the trade is in the money, and I'm taking my profit. Thank you very much. And there you go, folks. So this takes us to the end of our trading time for our three-part morning session. I might be able to do some trades from 11 to 11:30, but were you able to walk out alive this morning? Let me know. Feel free to share in the chat. And when you see me looking up, I have a bank of monitors 3 stacks high. So that you see me look at a variety of things all at the same time. So I know there was a couple of questions that came in that I was not able to answer fully during the trading time, but I'm gonna do that when we come back from a little break here. And you can of course put your requests into the chat. If I don't get requests, I've got a couple of things that I can do to teach and kind of weave that into the outlook of the market. The outlook of the market moving forward into the end of this week, and of course to start off next week as well. So let's take a little pause here, folks. Looks like folks are alive and did fairly well. So I'm happy to hear that. So thank you for sharing. For those that decided to share, let's get going. All right, I'm going to take a little pause back here in about 5 minutes or so. I'll put a little banner up on the screen indicating just that, and then we can go from there, folks. See you back here very shortly, folks. All right, folks, I'm getting back onto my desk over here. Let's get me back on camera. All right, should be back here. All right, so we've continued on. We're above the 820 line. 840 is the next little structure of resistance, but I'm going to take on a long over here. We should have the ability to push up from here. And of course, what just happened over there? Yeah, it looks like it's in. Okay, it's in. I think I've got too many windows open on my side, but it looks like the trade is executed, which is good. And we can have some oscillation back to rising support, but we're trying to break through a structure at this stage again and come back up to and through it. And that structure again is the set of volume point of control lines in the 820 to 840 area. The trade would be up to 925 or potentially higher. And if we can break through the 925, that opens up more headroom for us to continue on the long side up towards roughly 30,090 points, 30,100 points. That would be the next barrier of resistance. There is mathematically, there is a behavioral barrier right around just above 30,000. So if we're going to plan out the trade, above 840, it's to 925. Above 925, it's to 30,000 and about 10, 15 points. Above 30,000, 10, 15 points, it's up to 30,094. If we come back down below 820, my trade is bunk and has to go away. And that number would be 820, and we're not that far away from it, right? But what's happened here is a buy signal state, well aligned with the ES. I'm not seeing any big problems with the situation. It's just going to take some time probably for it to mature and drift and grind. Remember that we're dealing with a market that has already had the major sum of its big move already happen. And Howard, that's amazing. I'm happy to hear that. I'm happy to hear that. All right, so folks, let me know. I know that there were some questions on the triple S indicator, and Ray, you were asking about the 1 hour charts, triple S lines, and what is that all about? So the triple S indicator on a 1 hour chart really sets the tone. In the sub chart is the indicator. The signals are on screen. So the signal is a triangle. Just simple, clean, elegant. And maybe I'll demonstrate it on the ES side. So let me just do that real quick. Get that across screen if it can. I've got so many windows open that it's probably congesting and I have to refresh my system. So my apologies on that, but let's get this going. So what I'll do is I'll just explode open the 1 hour chart, and what you've got on screen right now is the triple S indicator in the subchart, the moving support and resistance channel, Rob's MSR channel on chart, Rob's speed lines on chart. The triple S indicator comes with triangles and dots on chart itself. The dots are meant to help stay in a position and tell you when that position is starting to cool off. So right now, we're in a buy signal state on the hourly chart, which happened on the 9 a.m. hourly bar. Okay, we got above the top of the MSR channel where we had a nasty slip, but you can see that slip took you down to the bottom of the MSR channel and it held. We retraced right back up, and now we're continuing on forward, trying to get back up to the drop point from 8 a.m. on the 7th of July. And what's happening here that can be very useful to day traders is obviously there's a crossover. The location of the crossovers in the lines is important. If we see, you think about trading as war, the lower half of the 4-quadrant channel is homeland. The upper half is enemy territory. And the red jagged line is the triple S line. Think about them, that line as the soldiers. Think about the fast momentum line, which is the dashed black line in light mode here, as the generals. And think about the blue line as the king and the queen. So what happened over here? Well, the soldiers were intersecting with the generals in the very bottom quadrant of this 4-quadrant channel. Okay, so in homeland, and the generals sent them on a campaign. So they went from the bottom quadrant, crossed into the 2nd quadrant. They crossed over the king and the queen to get the rubber stamp that, yep, this is a campaign that we want to go on. And now they're coming up towards the enemy gates, which is the center of the channel. Right. The directional decision that is, really in play is the slope of the blue line. So what do we know? It was sloping down as we were trying to overturn the sell signal state, and now it's starting to turn the corner. It has not turned yet, but technically from the last closed hourly bar to this one, it has started to slope up. The upslope supports long side trades. And this is the same sort of analysis to be done on the NQ or MNQ, whichever way you want to look at it. So let me just make this full screen, and I'll take you to the hourly chart here. Let's go. Oh, we're already on it. Okay, perfect. So this is just in dark mode. Now, the insight that I gave you in the pre-market was that we're likely, it is the NQ that is responding to oil, and it's the NQ that is going to pull the ES up. The slope of that slow momentum line, the king and the queen line on the NQ, was already up, well before, and it had already turned up well before the ESs had turned up. And that slope is still up as we speak right now. Okay, we're still up, but there's a limit to how much more up we can have, right? We've already seen the campaign launched for conquering the upper half of the channel. That happened yesterday. The campaign went into force. We crossed through the enemy gates, which happened to also be where the king and the queen were from the last victory tour they had. And the soldiers conquered land. King and the queen wanted to come along for the ride and see the victory as it was happening. And right now, we still have a little bit more land to conquer up until the top of the channel, which is, again, available. It is likely to happen. We want to make sure that there's alignment in the signals and, of course, the structure of the subchart indicator between the 1 hour and the 5 minute in particular. So do we have that sloping up on the 5 minute chart? Yep, it is. Have the soldiers gotten into the upper half of the 4-quadrant channel? Yep, they have. So there's land to be conquered. Over the next 20 to 90 minutes, the idea would be continuation up. But the way that the tool can become very useful to the trader, just on a basic directional trade, is if we are not able to hold above the center line on that 5 minute time frame, okay, it can mean perhaps a downdraft is going to set in. Right, so one wants to be very careful, and the leading indication for that would be the 1 minute chart. Right now, on the 1 minute chart, we're trying to see the soldiers through the enemy gates. They're struggling to get through them. Right, we have not gotten through, and therein is risk. If the soldiers come back down and move from quadrant 2 down to quadrant 1, or they cross below the king and the queen and the generals down over here, we're not in a good spot. We're in a bad spot. Right now, it's still alive. Right, it's still alive, and this should be seen as consolidate to continue. Right, we've got the 5 minute charts, slow momentum line or king and queen line, blue line sloping up. We've got the hourly charts, king and queen line sloping up as well. Now, here is an additional tidbit that is part of the tool. All sorts of tools have particular setups that are very high probability. The one that we're dealing with right now, or looking at right now, is the FFF tool, and it's got one of the highest probability setups out there. It's not because it's my tool. There are other tools that have very high probability setups as well. I'm just sharing with you what the setup on this tool is. It's a setup called pre-trade conditioning. What does this mean? You have to have a minimum of 3 signals, 3 triangles on chart. Right? And when I'm day trading, I'm really day trading the 5 minute charts signal or setup. I'm using the 1 minute chart to trigger the execution, and I'm relying on the backbone of the direction on the signal direction on the 1 hour chart. So the backbone is in play. right? The backbone is in play. We know that the slope is up. All of that's good. We know we have room to carry on higher. The soldiers can come up to the top of the channel. So if I go down to that 5-minute chart, what I want to share with you is this pattern over here. It requires a minimum of 3 signals. So we have a buy signal at 10:35, a sell signal at 10:40, a buy signal at 10:45, a sell signal at 10:50, a buy signal at 10:55. So you look at this and go, this is ridiculous. You're getting signals awesome. No, this is exactly what you want to see. A minimum of 3 signals, and each signal should not be separated by more than 6 bars in between each signal. In this case, they were just back to back. Now, you're going to be left with a signal. How do you know you're left with a signal? The next bar or bars open up, and there is a directional move above or below the channel. So we were left with a up signal, right? We were left with an up signal at the 10:55 a.m. Eastern Time 5-minute bar. And the next bar opened up, the 11 a.m. Eastern Time 5-minute bar opened up with price action moving above the top of the 3-line channel, the MSR channel. And let me just clean this up a little bit over here. I'm just going to open up the menu here and see if I can clean it up just a little bit. So I'm just going to hide a couple of tools. Okay, just to clean it up a little bit there. I've left the speed lines and the channel on for now. The bar that opened up and pushed above the top of the channel, if it did not have the double red dots, I'd need 2 of them after this pattern takes place, the 3 signals. I'd need 2 of them, and both sequentially rising, one higher than the other. But I had the first bar that pushed above after the signal up, after the pre-trade conditioning, double green dots were there, and we were above the top of the channel. When those double green dots are there and that bar is closed, the pattern is engaged. So the long is viable. And it was viable from roughly 29,820 onwards. However, we know this entire structure we're moving into is resistant. So I have a technical pattern that's supportive, but I've moved into a resistive structure. And I've moved into a resistive structure on the heels of an already big push up in the market that has used up a lot of the fuel. So I have to be, common sense has to be overlaid on top of everything. I'm not going to swing for the fences on this. This is not the beginning of the move after yesterday's 4 a.m. drop, right? We already had moves yesterday. We got above the channel. This is an hourly chart now. You can see it. We got into a buy signal state around 1 a.m. or in the wee hours of the morning. We followed through to the upside, and we had a little pullback. Sure, tested the channel. Tested the champion cross buy zone and pushed right back up off of it. The odds support a continuation up that should take us to a higher high. So all I've done here is I've just gotten a little deeper on that question that was asked to share with you the beauty of that pre-trade conditioning pattern, and of course how important the 3 different time frames are that I'm using to help with directional decision making. The hourly chart is the backbone of the trending direction on the day. The 5-minute chart is the traded day tradable chart. The signal between the 5-minute chart and the 1-hour chart, the slope of the blue lines, having them aligned puts us, if we're going to grade trades, if I did not have alignment between the hourly chart, slope of the blue line, signal on screen, if I didn't have alignment between the hourly chart and the 5-minute chart, I'd be giving it a grade of anywhere from C+ to C-, which is the lowest grade I can give. If we've got alignment, we're in the category of anywhere from B- all the way to A+. Now, I wouldn't grade the opportunity this morning in the A's because we've already had a big move in the rear view mirror. So we're somewhere between B- and B+. We still are right now. I would put it at a B, not a B-. I'd put it at a B. Now, if you want to consider other time frames, the most important part of considering the other time frames are the technical structures that are on the screen, because the bigger the time frame, the more important the tracks, the technical tracks that are laid down. So this is a 4-hour chart. We got above the MSR channel top, which was very important, and that number is 29,800. This is the same stuff I said at the beginning of the session, right? we have a barrier up here at around 29,975. So we'll be cognizant of that if the market so should try to come up into that territory. At this moment in time, we can also go back up to the daily chart, by the way, and use that. I don't go much further than that, but the top of the daily charts channel is what we've effectively come up to. We faced it as resistance, and we have not been able to punch through it. And this is all standard fare. This is all stuff that you've heard me say. And repeating it may illuminate a little further. So I'm still in this trade. It's still a valid trade, but it's not going anywhere at this moment in time. I can still stick with it, to a point, right? I do want to see the fast speed line above the slow. I like the fact that we've got the double green dots in play, but I do want to see on a 1 minute basis, 1 minute time frame basis, the soldiers get through the enemy gates and get into the upper half of the actual triple S channel. They're likely to do that. Why do I know that the odds are on my side? I've got alignment between the 5 minute time frame and the hourly time frame. So the 5 minute time frame in a buy signal state with this gorgeous pre-trade conditioning pattern in play. And we got our up signal. And as soon as price got above the top of that MSR channel at 11 a.m., these are 5 minute bars, double green dots were there. That's part of the triple S tool, followed through. The whole point of the double green dots, outside of the pattern, is to stay in the position. It's hard to stay, right? This entire process over here, before we met, said we were in a triple S buy signal state as of 7:30 a.m. Eastern time. It didn't have the pre-trade conditioning pattern really in force here, but it had a standard buy signal. And we had a beautiful, I call it a brilliant cross, where the crossover happens of the triple S line, red line, the soldiers, through the generals, the dash line, through the king and the queen. When that all happens in the bottom quadrant, that's one of the highest probability single triangle signals that you're going to get with the tool. Typically it'll have an hour at minimum of upside after that, if it's an up signal. It works the same way on the way down, but it's not necessarily a full hour that you're going to get of downside. And here we are. The soldiers are through the center of the channel on what time frame? A 5 minute chart. Okay. Go to the 1 minute chart. You can see that we've got the double green dots. We're above the speed lines. We're trying to rise up to the highs. So the interplay between understanding the lens of the technical tools that one uses with the actual structure of the market is the sweet spot. So that's why you see me bring up the plainclothes charts. And I go, hey, these are the fundamental structures of support and resistance we're dealing with based on the number of contracts exchanging hands at price levels, based on the bigger picture chart pattern, the phase that the market is in overall, the pivot lines. So with respect to the volume profile, you've heard me say this area, 29,820, is a very important waterline. Right? When we submerged below it back here on the 23rd of June, and we're not able to get back and hold above it until the 29th of June, it was bad news bears, right? Then when we were able to get above it, you can see how expansive the move was. But it's part of a market that has been in an uptrend for a little while now, okay? And it's been coiling. If the coil breaks to the upside, we are likely going to have a very attractive several weeks of market action through earnings season, Q2 earnings season. And based on what we've seen in terms of market manipulation, headlines, press conferences, that kind of thing, especially yesterday, right before a big 10-year treasury auction up, you see the US-Iran thing starts to cool off. Oil gets pulled back down. Trump did the job on that. And, risk reversal has happened. So I hope that adds a little bit to your, overall trading acumen and thinking. And the trade that I took on, 18 minutes ago when I started describing this process is profit positive. I am approaching the end of my time with you over here, so I don't want to go too much further. But if there are any other questions, I should actually go and check the chat. There we go. Okay, so. The trade's in the money. Okay, it's got the chance of continuing. I might just leave it as is. But if we start coming down below the speed lines, I'm probably going to cut the trade. I'd like to see on the 1 minute chart the soldiers get actually through the center of the triple S channel, and they haven't. They're trying to. They probably will. But for posterity, I am going to close my trade right now because we can have an oscillation that takes us back down to 850, 840, and then try again. We come up through 885. We're making a move up towards 925, which I have already identified for you. 925 effectively is the bottom of the weekly pivot balance area. 29,925 would be the target that we're trying to rise up to from here. And then from there, it's up to about 30,000 and about 10, 15 points. Above there, 30,000 and about 95 points. And then we can go. And I don't want to do the projection for the rest of the week, Rajan, for the next week. But for the rest of the week, the market's back in the coil, and I'm going to give it to you in an if this, then that. It is likelier that we hold the water line. It's likely that we're going to slow down and need to consolidate over here to continue up, right? That would be the idea. Oil is in a topping process, okay? The dollar is expensive. The idea, the bond auction went well yesterday. We've got another one today, 30-year auction. Let's see how that goes. More likely than not, we're going to see foreign demand be pretty good. It was very good yesterday, especially after Trump's press conference. And up and away we can go from there. So I'm going to say above 820, 29,820 on the NASDAQ, right? And it should be the NASDAQ that anchors the outlook. We are probably going to see a rise that takes us up towards the top end of the coil over the next 1 to 3 trading sessions. Is the best time frame to give you that type of projection on. If we submerge below 820, it's not game over. It is game over back below the bottom of the coil, which would be below about 29,590, and then back down to selling we go, and lower lows should be expected, right? So this was a event-driven risk-on reversal that transacted yesterday midday, pulled us out of the nasty dip because it was Hormuz nasty bad, and then no, it's going to be fixed. Here's why and how, and oil comes down, up the market goes. If you're going to track it to the primary market, which usually is the market that signals everything, it's already above the top of the coil again. It's already above, well above its waterline, 75.55. So it's well above there, and the Nasdaq's above its waterline at 29,820. It's 50 points above there or so. I don't want you to think that the ES is going to lead the move. It's still the Nasdaq that's in the weaker position, and it's the one that has to really carry the torch, and take us further from here. And there you have it, folks. I think that we're probably going to see a grind up that will involve shallow pullbacks over the course of the next hour or so, and then we can pick up the ball after that, folks. I hope you had a good morning here, trading with Z or me, and I hope it was eventful for you. I hope there was learning. I hope there was some earning, and I look forward to doing it again with you tomorrow. Next week, we are going to be moving into the Wealth 365 Summit. It is the biggest and the best one yet. And just to share again a little with you here, there's going to be the most number of giveaways of prop eval accounts in history done in 1 week, and it's being done for those that are attending the summit next week. And it's obviously it's prop accounts meant to be used on wealth charts. So I can put that up on the screen right now and share that with you as a way to end the session. There's going to be a week-long trading challenge. Okay, so there's going to be a week-long trading competition, and there's going to be 1,000+ prop eval giveaways. And you can join the summit by simply going to joinziad.com. Get your seat secured. You'll get lots of good information before the summit and some goodies, some videos, PDFs, that kind of thing that can get the juices flowing. And then we start bright and early on Monday morning. I'm not going to be doing this live room experience next week because we're going to be at the summit next week. We'll resume that live experience with me, trading side by side with you, after the summit's over. But we still have the end of the week, right? We still have tomorrow to go. Rajan's question was a good way to end off the morning. I think we are more likely going to drift higher and try to see something north of 30,000 on the NQ. And see the ES come back up to local highs or higher, which would be about 7,600. So we're on course for that right now. Don't expect it to be, big bursts up, because think about what's happening here. This is not a market where you have the catalyst from an earnings standpoint yet that say up, up, and away. We get a whole bunch of them next week. So next week's going to be important from an earnings standpoint. How we end this week can set the stage for that. If we're above 7,600 on the ES, if we're above 31,000 on the NQ by the end of the day tomorrow, that puts us in a good spot for continuation higher in the front end of next week. And notwithstanding, of course, the normal, which is par for the course, the back and forth on US-Iran. If it sours again and another missile hits another tanker or this, that, or the other, there's obviously potential for issues. All right. And there you go. Well, JT, there you go. So you're going to get lots of great speakers next week. I'll be speaking several times. Rob's going to be speaking, every single day. And he's going to be doing after-hour sessions as well. So feel free to go to joinziad.com, get your seat, get registered. And I'll see you back here tomorrow at 9:15 a.m. Eastern time for this type of session where we'll do the pre-market read. We'll do the live execution, pre-market read from 9:15 to 9:30, live execution from 9:30 to 11 a.m. And then from 11 a.m. to 11:30 a.m., this is all Eastern time, we'll do the lessons learned, the deeper dive on education, and of course, getting questions answered. All right, folks, I hope that you enjoyed your morning here with me and us. I look forward to tomorrow. I wish you a wonderful rest of your trading day. Stay safe out there and go to joinziad.com. Bye for now, everyone.